Hello, everybody. So many of you have requested a video on stock screeners and what type of tool I use to screen for stocks. And so the tool that I use is FinViz. I'm obviously not the only one using that. You may be familiar with FinViz per Twitter because on Twitter you have a lot of people who show this map with a meme, and you'll typically have a politician, and they will typically do that. They'll take, let's do the 1 year performance of the stock market, or they'll take an unflattering performance and they'll be like, look, the stock market is up, the stock market is down. You may have seen this before, but it's very interesting because you can really go back a long time. So you go 1 year, or go back 1 year, you can really see the performance over 1 year, right? Google's flat, Tesla's down quite a bit over 1 year. You can really track the performance with the map, the S&P 500 stock market map. You can also do that with ETFs and look at what are the biggest ETFs if you're into those. You can look every single stock. Now, this takes a while to load, but this is very helpful. Like if you look, you can zoom and stuff. It's interesting. But really, this video is about a screener. So, what is a screener? Well, a stock screener, and there's many of them online. I'm just showing you this one. It's going to scan thousands of stocks based on criteria. So on FinViz, you want to click on screener, and then you want to go on all because you want to have all of the criteria. And obviously, some of the metrics are metrics that we like, that are great. Others, not so much. So let me just show you how I would do it for the type of stock that I look for. Like, let's say I'm looking for a 10-bagger in the more technology or service space, but with specific characteristics. You'll see that I can put a lot of the characteristics that I have in my spreadsheet. So, for example, market cap, I'm going to assume between 300 million and 200 and 2 billion to kind of weed out companies that are too small, right? And then you go down. So price to book, I don't care. Net profit margin, these are all metrics that I do not look at. I don't look at PE, price to cash. These are all metrics I don't look at. Payout ratio, there's no dividend, so there's no need on all of that. The sector, we'll see if we do the sector in a bit or not, because you'll see oftentimes oil companies show up in these screeners, and they tend to be problematic. Anyways, insider ownership. Be very careful about insider ownership. The data on a lot of these platforms and insider ownership is often wrong. But what we care about is the sales growth over the past 5 years. I wish they had sales growth 12 months out, but they don't. So what you would do here is, for me, as you know, I look for stocks that grow at least 30%. So for that, I would do a sales growth. The maximum I'd do is 30%. So I would only look at stocks that have grown their sales over the past 5 years at 30% per year. And you can see we just reduced from thousands of stocks to 143 stocks. So that's pretty crazy. Okay, all of these I don't care. Analyst recommendations. If you know anything about analyst recommendations, you know that analysts always recommend stocks. So that's kind of the thing. It's kind of ridiculous. The PEG ratio, that's Peter Lynch, but I don't use a PEG ratio because I look at growth and I look at gross margin. So I'm not going to put that in there, but you could if it's your style. Gross margin. Now, I care a lot about gross margin. And I'm going to say ideally, I want at least 50% gross margin. But for a lot of hyper growth stocks, like the one I'm looking for, like if you're looking for, say, a 10-bagger, I would argue 70% or more gross margin is important. And that's going to reduce very good. We went from 170 to 34. There's only 34 stocks. And then the last thing that you want to do, if you want to see something inexpensive in there, the last thing that I recommend is you do the price to sell, and you want to make sure, really under 5 begins to be good for a price to sell, right? With a 70% gross margin under 5. And there you go. And you have only 26 stocks left. So pretty stunning. And if you actually try to move away from certain sectors, like, for example, energy, be very careful because earnings are very volatile. But you can see some stocks that are probably interesting, right? So Fiverr is one of the stocks in my spreadsheet, right? And this website identifies as interesting. What else? These are stocks I don't know about, right? An edtech company in Brazil that fits this criteria could be interesting to look at. Edtech company in China, if you're into Chinese stock. Medifast, well, the stock seems to have cratered, but might be interesting to look at 900 million market cap, right? And you can go on and see what else we have. Typically financials, I tend to stay away from financials. So, okay, so we had GoodRx, we have TELUS, which is a software company from Canada. We have a lot of drug companies that really fit this criteria, but I might have been a little too picky. if I'm a little less picky, for example, and if say I want over 60% gross margin, and say I'm going to let them be, say a price who sells under 8, I'm going to get many more stocks that I wouldn't have had otherwise. And then it's a matter of going through them and seeing if you like. You see Upstart. Upstart is a big growth stock that a lot of people on Twitter like very much. Moving on. Let me see. Moving on, right? LegalZoom. That's an interesting one. Um, Okay, IIPR is actually very interesting, very unique in that space. GoodRx is a stock that I would like to look at some point. I've seen it come up over and over in screeners. I think it's interesting. You want to be very careful with, for example, the marine and shipping companies. For REITs, obviously, you want to be very careful with those, especially the commercial real estate is going through a lot of trouble. Biotech, oftentimes biotech are more of an expert's game and an expert's play. So I would be careful also with biotech. You really have to be an expert in your field if you're looking at biotech stocks. And let me see page number 3, and there should be probably more software showing up in page number 3. And there you go, TELUS shows again and Sumo shows again. And then you can also be even pickier and not pickier, but look at bigger companies. And if you look at bigger companies, it's going to find you over companies that fit this criteria, right? Up, here we go, Teladoc. Teladoc's a big one. Topgolf. Topgolf was actually a darling of a lot of golf investors. Very interesting company here. Very different business model. There's a few other ones that you can look at. There you go. Now we're getting to a lot of the stocks that we cover on the channel, like DocuSign. No, I don't cover good DocuSign, but that could be a good fit. Stoneco, of course, my favorite. Stoneco shows up in there. PagerDuty. Smartsheet. Oh, I've been wanting to analyze Smartsheet multiple times. I haven't had the chance. Smartsheet I've identified, and as well as Alteryx. So this is how you do it. Feel free to play with the spreadsheet, really play with the numbers, but you can see that it's very helpful in my opinion. And sometimes I use it to screen stocks, and that's it. That was my screener video. So as always, none of this is investment advice. I really hope you loved this video. It's just entertainment, no investment advice. Have a great day. Thank you for watching.